Hello and welcome to this week's Friday market update. Mortgage rates kept coming down this week, finishing below 6.5% for a 30-year fixed conventional loan. FHA and VA rates actually dipped below 6%. These are rates coming from Mortgage News Daily. It's a great online resource. So everything is lining up right now for lower rates in the coming months and into 2025. Jerome Powell, the chairman of the Federal Reserve, and his cohorts were up in Wyoming this week, and he said it's time for the Fed to drop the rates. He didn't specify by how much, but it's pretty much a lock the Fed will announce at least a 0.25% rate reduction at their September 18th meeting. I think it's going to be 0.5%. So that's the start, but Wall Street doesn't think it will stop there. So the market is putting a 73%, there's odds on everything, right? 73% chance of a 1% drop in the Fed funds rate by the end of the year, and another 1.25% drop in 2025. So this would be a total drop of about 2.25%. And where does that leave us? Leaves us just, the Fed funds rate is currently about 5 3/8. It would come down to about 3 1/8. So that's a pretty good rate. How does this translate, though, to mortgage rates? So it's possible mortgage rates could be in the low to mid fives by the end of next year. And FHA and VA rates could actually be in the high fours. So now the real question is, what does this mean for home buyers? So it means a lot more competition. We're going to see a rash of buyers come into the marketplace. And for every 1% drop, technically the affordability for people, it brings in 5 million people. Now, we're not even having 5 million sales, but there's definitely potential for more buyers to come in. So as an example, on a $450,000 loan at a current rate of 6.5% principal and interest, that's $2,844 a month. So if rates did drop to 5.25%, the payment drops to $2,484 or a $360 per month savings. You think that's going to get more people in to buy a house? So a home buyer today that can actually afford a principal and interest payment of $2,844 would be able to increase their loan amount to $515,000 if they waited from $450,000. So does this mean that home values will go up $65,000? No, but the influx of buyers increases the competition, and many may be likely to pay a little bit more than their competitor or the other buyer so that they want the house. So they'll pay a little bit more for the house if they really want it. So in my opinion, the optimal window is right now for a buyer to secure a reasonably priced home. There's more inventory and values have moderated. So before everybody jumps in, they should go out and actually look at homes. So while they will pay a little bit more in interest now than if they waited till next year, they can secure the house for a much lower price. So the buyer can then refinance into a lower rate when it makes sense. And if you look at appreciation rates and you look at the difference in interest rates, it's the math is in the buyer's favor to buy right now. So if you have a client on the fence, I can certainly provide you with the plain and simple numbers so they can look at it on paper and understand it. And if you're working with sellers and your clients feel stuck in their home, they can get a little closer to the interest rate they are leaving behind and use the equity to keep their mortgage payment similar or lower than their current mortgage payment now. Or they could actually use some of the equity to buy a new house with a down payment and maybe even keep their existing home for a rental. So don't let your buyers be stranded at the train station. Get them on the train to home ownership before the train is full with a bunch of buyers that are sure to come in the next few months. So now's the time. Make it happen. So as always, feel free to reach out to me directly to get your buyers pre-approved and educated so they can make the right decision and take that fear out of them. You can also send them to my calendar link where I will go through a free CIA credit income asset analysis so they know exactly where they stand now and what they need to do to get into a home. So my job is not just mortgage finance. It is absolutely to get your buyers excited to go buy a home and feel confident that they're making the right decision. So have an awesome weekend, and we'll see you next week. Gaylord out. Bye.